Hey buddy, Boris, this is BK Force. Welcome to the weekly technicals for the majors for euro dollar, dollar yen, pound dollar, May 27th to May 31, 2019. The big question in front of us, of course, next week is really dollar rally done, because we've had lots and lots of bottoming out across not just the majors, but the calm dollar. We'll take a look at everything this week. And I think there is certainly a case to be made here that just for the near term, maybe we are at some sort of a maybe shaky, but pretty close to a definitive bottom here in the dollar. The dollar index itself, I think, had a big turn to the downside. And that's simply, I think, a function of the fact that this week, the really, really shocking piece of news that shook the market was the very sharp decline in flash PMI readings for the US. Now, it's just one report, but it is a flash PMI reading, and it was such a sharp decline against the expectation that the U.S. economy is just basically operating on all cylinders. I think it shook the market out of its complacency that all of the geopolitical risks and the very, very tepid consumer demand is finally maybe getting people to realize that the second half of the year is not going to be this magical 3% GDP growth and lots of earnings in the U.S. Economy, and therefore the yields, the bond market, which has been stubbornly bearish, may be proving itself right. So the lower the U.S. yields go, it's really not a question of how well Europe does or how well the commodity economies do. It's really a question of the fact that the U.S. economy is really doing worse than the market expects, and therefore the flight away from the dollar for the most part. So it should be interesting next week to see how it plays out. But for the near term, as far as the levels go, the euro dollar appears to have found clear support at the 111 level. Now, it has a lot of resistance between 1250 and 1300, so we'll see how far it can go. Dollar yen, of course, trading on always different considerations than anything else. It is really turned very negative. But if U.S. yields sort of stabilize here, there is a decent chance, I think, here for dollar yen to kind of stabilize at this 109 level. If we break the 108.50, though, that's a very, very significant risk-off signal. It takes us all the way down to the fat finger lows at the beginning of the year. We'll take a look at the charts in just a minute to show you that. And then cable, of course, its own idiosyncratic story with Brexit and the non-ending dysfunctional drama that is. Theresa May's departure kind of viewed as a relief story until, I guess, the next political blunder comes in the form of Boris Johnson. I certainly think that if Boris Johnson wins the Tory leadership, it's going to be difficult to see how the pound rallies. But in the meantime, the market is kind of giving UK the benefit of the doubt. There seems to be a tepid amount of upside here to the 128s. So we'll take a look at that as well. The calendar this week, very quiet. As a matter of fact, Monday is essentially a completely dead day in 2/3 of the world. US is on holiday. It's a major holiday in the US. London has a bank holiday. So expect liquidity to be very, very thin, and trading to be relatively quiet until basically the week starts on Tuesday for everybody. Now, on Tuesday, we get a little bit of European data. Here, we're bearish European data. There's nothing new. I mean, all of the PMI data has just shown that there's no real improvement in the European economy. IFO was lower. ZOO was mixed. So we think that confidence data is probably going to be relatively weaker here. German unemployment change also looks a little bit weaker. This is one of the reasons why I think euro has a hard time trying to climb a little bit more. But so much of the bad news is in there that unless the data is just much worse than expected, I don't think it's really going to have much of an impact as we go forward. U.S. confidence data, again, nothing much on the calendar this week. We have GDP for Q1. It's a second revision here. It's going to matter very little because I think the market is really focused much more on the forward numbers. So none of this stuff will have any material impact. You can see that the data set really until the end of the week, when you get to personal income, personal spending, which is going to be important in a sense, only because it's been weak. And if it continues to be weak, I think that puts a little bit more of a pressure on dollar yen. But overall, it's just a non-eventful calendar. There's nothing here that you could even imagine trading on the majors of any imports. So I think we can just sort of let the calendar lead by itself and just look at the levels. So one of the interesting things about it on the tech side from the levels is this is a very strong, clean, powerful signal, the big reversal signal. The big question, though, is just how much more juice there is beyond this 2-day rally. Now we took off the 20 SMA, but this is a very, very tough and chunky area. If the prices are able to barrel through and close to the 13s, that would be a super positive signal that we have set not just a short term, but I think an intermediate term double bottom here. I think a more realistic expectation here is that we do have a short term bottom. We could come back a little bit to the downside, but generally, Euro went from essentially selling the lows or selling any kind of retraces into kind of buying the dips now. You have to assume, given the formation and the look of the structure here and the general negative view on the US side, that we're now forming some sort of a tradable bottom. And any kind of a decline here probably going to be a better buy than a sell, as this 111 seems to have really held pretty well for the near term. So I do think there's potential here for maybe 50 points of extension, but once we get to the 1250 level, it's going to be a very, very tough time. There's a lot of trapped sellers at this level, so you really have to have some serious negative dollar information to kind of want to push this through these levels and make a massive breakout. Generally, when you see these kind of things form, they take quite a long time. I think it's going to take probably 2 or 3 weeks for us to kind of wave ourselves in and out around this 110, 112, 12, 11 zone before we can conclusively say, yes, we've made a tradable bottom here. Cable is even less clean, and the cable has certainly made a tiny little V-shaped bottom here. And cable is, of course, so volatile that it could just take off really, really hard on any supposition that there is a reasonable Brexit compromise. That's really what it's trading on at this point. But I think, given the fact that we don't have anything new for at least 2 weeks, because the Tory leadership battle is just beginning, and then after that they have to vote, and you have to figure out who is going to be the leader. And then beyond that, you have to figure out if the leader is actually going to be able to maintain the majority. And it's very likely that we could go to a full-on election in UK, a snap election, which will be interesting, because in a way, the bullish pound case rests on the idea that it's a perpetual extension of Article 50, meaning that basically the Europeans will just come back to them and say, listen, you're in the union until you decide you're not going to be in the union. And so essentially that's positive for UK, but it still creates ultimately a very unfriendly and very unstable business environment, because business spending, business investment, even consumer spending, consumer investment are going to be constantly on edge, trying to figure out is UK in or UK out. So the situation definitely needs to be resolved. I think, though, maybe the market is going to bet the resolution is going to be much longer than everybody thinks. In the meantime, it's just simply going to be a trade back to the moving averages around 128s. Unless we get some shockingly bad news, which at this point I don't even know what. I mean, perhaps Farage winning such a strong hand in the European elections that a hard Brexit becomes almost an inevitable worry. I do think we've sort of hit peak sell-off here. We're very, very well stretched away from the moving averages over here. It's likely that we have a chance to come back at least to the 28s, which was the big reversal candle over here. Of course, given cable, it could be one of those one step forward, 2 steps backwards things. But generally, when you look at the cable formations, the one solace that you can have is that this tends to be a V-shaped turn currency, meaning that it's usually not 1 day, but at least 2-3 days of counter trend movement. So here you have 2 or 3 days of counter trend movement. Here you have 2 days with a small retrace and then a continuation of counter trend movement. Here you have full 3 days of counter trend movement. It's very rare, and unless you have this massive big candle, still doesn't take out the lows. My point is, I guess, what I'm trying to say, when you look at all of the formations here, is we're probably good for another 100 points. You do have to give yourself, however, the full, what's the low over here? Basically the full 100 points of room to really let this V-shaped trade work itself out. But it's probably, just on a purely technical basis and a modicum of support, a halfway decent trade, and probably a pretty decent trade to start the week with. So that's my view. Wish you guys the best luck, the best trading. Boris, over and out.